Hello and welcome to another episode of the Eunice Ajim show. I am your host, and we are going to keep going on the series on how do you get started investing in African tech startups. So, how do you even get started? I think I mentioned earlier, like all the different kinds of investors that we have that invest in startups. So I mentioned angel investors, venture capitalists, private equity a little bit when you're thinking about growth stage, foundations, incubations, accelerators, and all of that. But if you're just like an angel investor or a high net worth individuals that have no idea on how to get started, or you are an African in the diaspora that wants to support your continent and you're thinking, does it even make sense to start investing in these African companies? Like, is the value there? How do you get started? I would say there are probably two ways I will get started if I had absolutely zero understanding on how to invest in tech companies. I would say the first way, which is typically on the smaller and like less commitment, is angel investing. Actually, it does require a little bit of your time because you still have to be able to like review a lot of companies, make your own decision, and then invest in those companies. So technically an angel investor is really just somebody that decides to go out there and invest your own money by themselves. I did that the first year when I decided that I wanted to invest in African tech companies. I would say the best way is not to go about your own. Like, you will always have a friend with amazing ideas. You will always have a brother or a sister or somebody in your network that is building an amazing idea and they're pitching you and they want you to invest. I will actually say that's a very wrong way of going about it because you don't have the full understanding of like how to structure the deal. You don't have a full understanding of like what are some of the metrics that you need to look at before making the investment decision. I would highly recommend you join a group, either a syndication group or like an angel group, because typically a lot of the groups out there that do angel syndications are already very plugged into the ecosystem. They know exactly the best deals. They have reviewed thousands and thousands of pitch decks and they have brought you the best. Versus you see your cousin that is building some sort of tech and you decide to invest in that because she's your cousin and she's amazing. I'm sure she's amazing, but the chance of her being successful is still very low. But if you know that there's so many other investors that have taken the time to be able to do the due diligence, to research the company, understand the market, review the product, check out the traction, and you're not putting your money alone, because again, startup investing is not a one-man business. You have to be able to like pull in the right resources to be able to make a company successful. Join an angel group and then start writing small checks. Typically, a lot of angel syndicates or group will allow you to be able to write anything between 1,000 to 10,000 to 50,000 to 100,000. But let me stop you right there. If you have 50,000 or 100,000, you should probably invest in Ajim Capital, which leads me to my second way, which is investing as an LP. We call them limited partners into venture capital funds. And the best way, in my opinion, is investing as an LP because you take one singular check. Typically, our minimum is 100K, and you invest that into a fund that has the opportunity to invest into multiple deals on your behalf alongside many other people's money. Instead of you only taking your money and investing like one specific companies. Because remember, like I mentioned in my last video, over 90% of startup fails within 7 to 10 years in business. And you want to make sure that if you have invested in at least 10 companies, there's a high chance that 9 of them will be dead by the end of the life cycle, and you better hope that one company is alive actually returns your fund. But if that's not the case, you want to invest in a VC fund that sleeps, breathes, eats, drinks, everything, venture capital and startup investing, because at least they have the right resources to do a lot of the due diligence that you might not fully understand when you're angel investing or doing this business on your own. Okay. The next thing is like, how much should you invest? If you're typically doing angel investing and you're just getting started, I would say start small. Write $1,000 to $5,000 check sizes into a lot more companies than writing big check sizes into a small amount of companies. I do understand the need to like write a big check into this company that you're super excited about. I would say wait. I always advise my investors to like start by writing a small check, get the updates of the founder, observe the company over a certain period of time, and if you truly believe that this company is actually going to be successful over a long run, then you can do what we like to call follow-on funding, which means that you're raising an investor in the fund, in the company, you see that the company is doing amazing, and you decide to like write a bigger check because you see the opportunity. If you're investing into a venture capital fund, typically the minimum for a lot of VC funds out there is at least $100,000. But typically a lot of emerging VCs or micro VCs usually have a mandate, whether if you're a minority or like a woman. Like for us, we have taken a few smaller 25K checks for like women and minorities to get into our fund. So that's another way to look about it. But typically expect $100K minimum. But don't get scared. I think $100,000 sounds like a lot of money, but typically most funds don't ask you to give all of that money up front. We typically have what we call capital calls, which means that at the moment you're investing, a fund might actually just call 25%, and they might only call that 25% over a certain period of time. Or they might do capital calls on a per need basis. So like when they find an amazing company that they're excited about, they might call 5% or they might call 10%, depending on like how much capital they need. So if you're doing angel investing, typically write smaller checks, 1 to 5K, and then only when you're really, really excited about a company, you can do a follow-on for a big check. And if you're doing VC investing, usually prepare yourself for at least $100K, but don't get scared. You typically, a lot of those funds do capital calls, so you don't have to send all of that money up front. How should you make your decision when a founder is pitching you? So I just had this question where it's like, okay, like how do you decide how much money you're investing in a company when the founder is pitching you? At a pre-seed level, a founder might be raising $500,000 at a $3 million post-money valuation. There's some investors, which typically is a little bit larger investors, they'll be willing to go in there and then lead the round. So they might come in and say, okay, because you're raising 500, we want to put 200 or 250 and lead your round. And all you have to look for is the remaining 250,000. And then you would take the remaining and then you might go and spread it across 2 or 3 or even 4 other VCs that might write anything between 50 to 100K check sizes. There are definitely situations where you might get oversubscribed, which means that you might raise more than the 500,000 that you initially wanted to raise, and that's a good thing, because typically you can just extend your runway. So instead of like, I'm raising 500 for me to be able to like stay alive over the next 12 to 16 months. Now you can stay alive over the next 16 to 18 months because you're raising 650. You ended up raising 650,000 instead of 500,000. But really, I think it's like all dependent on the founder. Like, there are definitely founders that go out there and they just have an amazing deal and like they get so many investors excited and then they oversubscribe their round. But there are also founders out there that go out and they want to raise and they're not capable of raising, and they have to figure out different ways to be able to like close that round. In this video, we looked at how to get started investing in the African market, specifically in tech startups, whether you're doing angel investing or venture capital. We looked at how much money you need to be able to get started, and how typically like founders make the decision on how much money they want to raise when they're going out to fundraise for their fund for their startup. Okay, until next time, I hope that you are living the best version of your African dream. Have a blessed day.